Hi, this is Andy at Finlingo, and today we're going to cover free cash flow to the firm, and that's money that a firm generates that goes to bondholders and goes to equity holders. And it's at the core of how to value a business, because what is a business? So if you think of a farm, what is it? Well, it grows food and it sells food for cash. How much cash can this farm generate, which you can then use to buy other really important things like Ferraris and chocolate and other really important things? That's at the core of how to value a business. How much cash can the business generate? So that's why it's virtually always somewhere on the CFA exam in some form. Now there's 5 different ways of calculating free cash flow to the firm. We're going to cover all of them in 5 different videos. This is the first one, and this is the one you want to cover because it's the least complex, which is working it out from net income. So let's go down to it then. It's in reading 23 in 2021. Which may be different when you come to see this video, but it will almost certainly be on the exam. I'm looking for a leaf. If you see a leaf, stop me. There we go. Free cash flow to the firm from this income. There's the question. You see the magic words net income and you go, thank goodness for that. I don't have to do it from CFO, which we will do in the other videos. Okay, so let's take a look at the help. And you can see there that we've got the net income plus non-cash charges, which is amortization and depreciation, because we don't actually spend that money. Cash doesn't leave the building. And then we have the interest, which was taken out of net income, but we have to apply the tax shield to that. And I often calculate that bit first and then go through the equation in my head to do the rest of the answer. We'll see about that later. Then we take off any money spent to keep the business running in capital terms. So on a farm, that would be buying a tractor. And then we take off any money used to keep the business going in terms of buying seeds if it was a farm. And then we have the cash that's left that's going to the bondholders or going to the equity holders in the farm. So let's go back to the question and have a crack at this then. So the first thing I usually do is I sort out that tax rate thing. So I work out the tax shield. So I'm going to go 16.75, which is the tax rate. I divide that by 100, and I make that a minus, and then add on 1. That gives me my tax shield effect. And I multiply that by interest expense, 1553. Now don't get that mixed up with interest received. That's a little trap for you. Sorry about that. I'm going to store that in 1, and then I'm going to walk through the equation in my head. So that is net income again, 35321. And I'm going to add on those non-cash charges which didn't leave the building. So I look for a depreciation, 2392. I look for amortization, add 721. That takes me to that. Then I add back my interest calculation I just did, add recall 1. And now I take away the cost of tractors. So I take away capital expenditures, 4278. And then I take off the cost of seed or inventory or whatever. Where's that? So that's working capital expenditures, 1997. That takes me to that number there, 33,451. That's going to round up to 33,452, which is B. So let me bring up my Android phone, and I will press B. Fingers crossed. Yay! Got it right. There's the equation for you to look at later on, and hopefully that is very, very useful to you. So I'll bring up the next question. And you can do that one for homework. So good luck with that. Do make sure you can calculate free cash flow to the firm in any of the particular ways. Watch our other 4 videos, which will be coming out shortly on this. And if you found this video useful, please do like it below. Please do subscribe to our channel, which lets us know that we should keep making more content like this. Anyhow, see you next time.